Your wealth deserves stability, expertise, security. Your wealth deserves LGT Cresto, private wealth with over a century of global heritage.
Hello and welcome to the Global View on this Wednesday. Let's take a look at what's going on at a macro level. Longer dated US Treasury yields fell on Tuesday after Moody's cut its credit ratings on several small to mid-sized US banks, and China exports fell much faster than expected in July, raising expectations for additional stimulus in China. The 10-year yield that fell 6 basis points to just over 4%, and the 2-year there, little changed at 4.75%. Now, in the latest Fed commentary, Philadelphia Fed President Patrick Harker saying the Fed may be at the stage where it can leave interest rates where they are, saying absent any alarming new data between now and mid-September, I believe we may be at the point where we can be patient and hold rates steady and let the monetary policy actions we have taken do their work. While Richmond Fed President Thomas Barkin says we have time before the next meeting to figure out whether the various forecasts of where the economy is going come true. Well, the US dollar did firm in the wake of the US banking downgrades and disappointing Chinese trade figures, which saw imports and exports fall faster than expected in July, which hurt the yuan and the Aussie dollar. The Aussie fell below 65 US cents before recovering to currently trade at 65.4 US cents. Oil prices, they initially fell on China trade figures, with the largest being the largest consumer there. July oil imports down almost 19% from the previous month. However, prices then rose as the US Energy Information Administration lifted its projected GDP growth for the US economy to 1.9% this year. Brent crude futures up around 1% at $86 a barrel. Base metal prices broadly lower, with copper off more than 1%. Iron ore having fallen just below $100 a tonne. And gold prices have fallen to close to a 1-month low as the US dollar strengthened, while investors remain cautious ahead of US inflation figures to be released Thursday morning our time. US gold futures are settling 0.5% lower at $1,959 an ounce. And lower Treasury yields push Bitcoin up around 3%. It's now chasing $30,000 US. Well, the Indian pharmaceutical industry is set to follow tech and become the next big growth sector. That's according to Mugunthan Siva from India Avenue. I spoke to Mugunthan earlier, who gave us his outlook for the Indian economy as the Reserve Bank of India meets with it expected to leave interest rates on hold again at 6.5%.
The 23 year end is March in India grew at 7.2. I think there's obviously a slowdown in the rest of the world at the moment, and growth has been pared back to about 6. But I think India still seems to, when you look at the PMI data, services PMI came out the other day above 60. So the local economy is still bubbling along reasonably.
Yeah, in fact, I note that PM Narendra Modi saying that India is set to become the world's third largest economy in his third term, assuming or providing he is re-elected. Is that also on track, do you think?
I think so. At this stage, it doesn't look like there's going to be a change of parties in the upcoming election in May 24. There's a 5-year cycle, so what he's implying is 2029, by then India should really be on the cusp of third largest economy in the world.
All right, well, let's then focus on those growth areas in the Indian economy, in particular, the pharmaceutical industry. What opportunities are you seeing there at the moment?
Well, I guess most people over the last decade have focused on consumption and financials as India has become more formalized and financialized. I think for us, the growth story of this decade is going to be more external facing and more manufacturing driven. So India has become a significant player in pharmaceuticals. It's now 20% of global generics exports, which makes it the largest in the world. In terms of its export market, it's about 25 billion. The local overall Indian pharma market is about 50 billion, and that should grow by the end of this decade to 130 billion, which would make it a pretty significant market.
So you think it was going to remain a key exporter in the global market of pharmaceuticals, particularly by supplying, I guess, those affordable vaccines, and particularly the generics, as you talk about?
Yeah, there's three aspects to it. One is India's vibrant local market, in the sense that there's a lot of people, healthcare spending is increasing, there's scale and there's cost benefits. Also, a huge number of employable people, particularly from a skilled perspective, as well as foreign investment. The foreign direct investment limitations have been up to as high as 100%. So there are several global firms also looking to build capability in India, given, I suppose, the diversification of supply chains and the China plus one thematic, however you want to look at it.
So specifically then, Mugunthan, how would you play this as an investor?
Look, I think for most global investors, accessing India requires a license, so that's been a little bit of an obstacle. But investing in a emerging market fund, Asia fund, or better still, an India vehicle like a actively managed fund or an ETF allows exposure to industries like pharma. Typically, when you invest in a global fund, you tend to get the top 10 stocks of India, for example, because of liquidity reasons. I think the growth story will be much broader than that. So to access these opportunities, it kind of pays to look at a vehicle that looks deeper than just the large and liquid stocks.
Okay, any ones in particular that you're focused on?
In terms of
those pharma companies?
We have about 8 to 10 in our portfolio. So the MSCI India has about 5% in healthcare pharma, and we in our fund have about 15 to 20%. And we're focused on companies not only that are strong in Indian pharmaceuticals and the local market, but also companies that are starting to make inroads into the US. One important fact is the greatest number of FDA approved plants anywhere in the world outside of the US resides in India, with over 100 facilities approved. The next highest country is Italy, with just over 50. So there's a significant opportunity to not only grow from India's market growth, but also to participate and win more market share from what's happening globally.
Interesting you say that FDA approval, because that was a question on my mind just in regards to regulatory risk, given it's obviously taken a huge chunk of providing and exporting those generic drugs. So does it face any potential risk in terms of further regulation?
Yeah, absolutely. So when you look at the past, Indian facilities always had more visitations by the FDAs and question marks around capability and issues around quality control. So over the last 5 years, a lot of these firms have made significant progress in quality control. India is now one of the largest lodgers of applications for new drugs, and a lot of the facilities have improved substantially, such that are meeting much more the quality control requirements of the FDA and the World Health Organization.
How is it placed when you look at its role in pharma across the globe, particularly, I guess, with China, which is potentially, I guess, a competitor there, and perhaps it does have a regulatory advantage?
Yeah, China was obviously much earlier to the party in terms of building the scale manufacturing game, and China's cost of putting down a plant is still cheaper than India. India has a slight labour cost advantage, but really to build a facility in China is still cheaper. But what the thematic is today is about the diversification of where your drugs come from, or where your active pharmaceutical ingredients are imported from. And the whole world is about diversifying that. And I think India is coming under the scrutiny of more and more foreign players who are looking to sort of build safety around their supply chains.
Now, Mugunthan, speaking of China, obviously we've had further data out of there yesterday, particularly with trade numbers. There is a growing global concern about that stalling growth there. That's certainly impacting what we're seeing in Asia. How is it playing out, particularly as far as India?
Look, India's export numbers are down as well. To be honest, that is more the fact that the rest of the world is starting to show evidence of a slowdown. I guess from a growth perspective, however, incrementally economies like Vietnam, Indonesia, Philippines, India are benefiting from taking a little bit more market share of global manufacturing, global exports. But what we need for India really to thrive and perhaps grow at 8% would be the rest of the world to have perhaps a soft landing and come out of a recession with growth on the other side. So if that was to take place, that would be the icing on the cake for India, which is thriving from a local demand, local population strength, but needs that global economy to pick up to really have that the next capex boom.
Specifically though, if we see a further slowdown in China, is that likely to drag on Indian growth, do you think?
I think if there's a slowdown in China, not so much, but more if there's a slowdown in the Western world. Yeah.
Well, Gunther Siva from India Avenue. That is the Global View on this Wednesday. Stay with us. The Open is just moments away.